Imagine a world where the digital gold rush has led to corporations amassing over $100 billion in Bitcoin. This staggering figure has sparked a heated debate among analysts who are now questioning whether the United States might one day seize these holdings, echoing the nationalization of gold in the 1970s. But here's where it gets controversial. The surge in corporate crypto treasuries, particularly Bitcoin, has reached an unprecedented level. As of July, corporate Bitcoin treasury firms have accumulated a whopping 791,662 BTC, valued at approximately $95 billion. This amount represents around 3.98% of the total circulating supply of Bitcoin. This massive accumulation raises significant concerns about potential vulnerabilities and centralized control. Crypto analyst Willy Woo has boldly suggested that the United States might follow a similar path to the gold standard era, where the government could nationalize these digital assets. Woo's perspective, shared during a panel discussion at Baltic Honey Badger 2025, paints a scenario where the U.S. dollar's weakening could prompt the government to centralize Bitcoin holdings. He warns, you could then rug it like happened in 1971, and it's all centralized around the digital Bitcoin. The whole history repeats again back to the beginning. To understand this, let's rewind to 1971. U.S. President Richard Nixon ended the Bretton Woods system, effectively suspending the dollar's convertibility into gold and abandoning the fixed $35 per ounce rate. This move marked the end of the gold standard. Woo emphasizes that for Bitcoin to replace the U.S. dollar and surpass gold as a new monetary standard, institutional adoption is crucial. That's not going to happen until you get the large gatekeepers of capital opening up to Bitcoin and pouring money in, he stated. Woo's comments come at a time when institutional adoption is accelerating. Just 2 weeks prior, 35 publicly traded companies had surpassed 1,000 BTC in their balance sheet holdings, as reported by Cointelegraph on July 25. Preston Pysh, co-founder of the Investors Podcast Network and Bitcoin venture fund Ego Death Capital, adds another layer to this debate. He suggests that nationalization efforts might target Bitcoin whales, private entities holding large amounts of Bitcoin. They're going to take the Bitcoin because it's going to have an institutional custodian that does not want to go to jail, Pysh explained. And this is the part most people miss. Despite these concerns, the growing corporate adoption of Bitcoin presents a massive market opportunity. Bitcoin, at just 16 years old, is already a $2 trillion asset. Woo projects that Bitcoin has the potential to grow 100 times its current value, reaching a $100 trillion market opportunity over the next few decades. This aligns with Adam Back's forecast, co-founder and CEO of Blockstream, who sees Bitcoin as a $200 trillion market opportunity in the long term. Back described this as a sustainable and scalable $100 to $200 trillion trade front-running hyper-Bitcoinization. Hyper-Bitcoinization refers to a future where Bitcoin becomes the largest global currency, replacing fiat money due to its inflationary economics. So, what do you think? Could the U.S. nationalize corporate Bitcoin holdings, or is this a far-fetched scenario? Share your thoughts in the comments below, and let's spark a lively discussion.